Hello and welcome to yet another episode of London Eye. My guest today on the show is Divya Mathur, Portfolio Manager at Martin Currie. Divya, thank you very much for joining in from Edinburgh today. Let me start by asking you how you've read this fairly spectacular rally that we've seen across emerging markets starting February, and whether you see it extending into the summer or fading because of the global risks that we are faced with.
Yeah, it's been a welcome rally that we've had in emerging markets. Bear in mind this has been after a long period of underperformance, but we have seen a recovery. A lot of it has been currency driven, and a lot of it has been on the back of better growth and better earnings prospects. Whether this continues is dependent on those fundamentals improving, and obviously there's some key risks that emerging markets need to deal with. We certainly think that within this environment there will still be corporates and companies that can benefit from the environment, but we certainly feel there are some key challenges that economies in emerging markets need to deal with.
As an emerging market portfolio manager, you must have a view on commodities, because a fair amount of the earnings picture that you alluded to in many countries, and in a smaller way in India as well, it depends on where the commodity cycle is. We've got a good rebound in commodity prices, but how are you mapping it from here on?
Yes, you're quite right. Commodity prices have improved. You've seen a number of commodities bounce quite sharply this year. The oil price obviously being the key one. Emerging markets are dependent on what happens in the commodity markets. China is still responsible for the direction for a lot of the commodity prices. We try not to get too clever in terms of trying to predict commodity prices. If we look at our portfolio, we have a number of names which are beneficiaries of lower commodity prices, and this is great for these companies because raw material costs are coming through, but we don't take an explicit strong view on whether we feel commodity prices are going to be considerably higher or lower from here.
What's your general view on emerging market earnings as an asset class before we drill it down to individual countries? Because last 5 years emerging market performance as an asset class has not been great. And if you drill it down to composite earnings for maybe the MSCI EM index, generally the EPS performance has been quite lackluster. Do you see that changing around in any significant way from here on, which could be the underpinning of much better performance in the years to come?
I think at an aggregate level, I think it's difficult to say that we're going to see an aggregate earnings strongly recover from here. But what we can, again, one of the problems of looking at aggregate levels is you sometimes do not capture the detail. You're certainly very correct to say emerging market earnings growth has been disappointing. If you look at the last 4 or 5 years, we've had this typical cycle as where we start the year with high expectations, and throughout the year earnings revisions and earnings are downgraded. But certainly going forward, we are seeing some improvements in earnings, and again, it's looking at it sector by sector, and we can see obviously the areas which have been impacted the most have been the commodity areas, the energy sector, industrials. And then in other spaces, if we look at some of the consumer space, the consumer sectors, you've seen some more resilient earnings coming through. But I'm not really expecting a massive improvement in earnings. I think it's going to be a gradual recovery, and again, it's going to be going back and I'll repeat myself again. It's going back and looking at the opportunity for the company and what can they achieve within the environment that they're operating in.
What about India? Because we've just come out of a quarter where there's been a glimmer of hope with earnings. After many quarters of continuous downgrades, we've seen a quarter of reasonable growth under the circumstances. Do you think earnings have bottomed out and have started turning the corner in India?
I think there's a fair amount of evidence suggesting both the economy is certainly bottoming, and we're seeing some early signs of improvement, and likewise one would hope that feeds through into corporate earnings. So yes, I certainly feel that there are a number of sectors in India where we could see corporate earnings coming through. With all these data points, you always have to take them with a pinch of salt. But certainly the data and the recent data that we see coming through from India is positive.
Is India an overweight in your emerging market portfolio, or are you underweight relative to some of its peer markets?
No, we're overweight domestic Indian names, and a function of that is the relative attractiveness of these Indian corporates compared to the rest of emerging markets. And I think that's something that we can often forget, with that actual decision, the fact that India and Indian corporates do look attractive relative to some of these other emerging markets, and the other emerging markets may be in emerging Europe, they may be in Latin America.
What about valuations in India? Do you think stocks that you track or invest in India can actually justify the valuation premium that many companies exhibit relative to the region?
I mean, one of the challenges with India is always valuations, and it's always near-term valuations. So, you know, I've been investing in India since the late 90s, and India is a great market for long-term sustainable businesses and business models. So companies which may look optically expensive in the short term, if you believe in their growth in the long term, that valuation worry is less. And India is a good market for those type of names. It's a big economy, it's a large population. If you can find those business models, those sustainable business models which can continue to grow in the long term, then you can take into account the fact that actually short term you may need to pay these optically high valuations.
What are your big bets in India in terms of the themes that you are backing at this point in time?
Well, you know, we spend a lot of time looking at bottom-up opportunities in India. We're looking at the companies that have a good track record, they have delivered to shareholders, they are focused on returns, and then we incorporate ESG within that. So there's some of our names that we have are names of businesses that have been around for a long time. So we own names such as HDFC Bank, Asian Paints, and Maruti Suzuki. These names have got great long-term opportunities in India, and they've shown great, a solid and a great track record. It's no surprise these names are close to their absolute high share prices. So even from looking at opportunities in emerging markets, and you know, emerging markets are nowhere near as an aggregate at the same levels of price as they have been in the past. These are companies that are. Why? Because they've taken advantage of the opportunities that they have.
The names that you mentioned are the absolute blue chips in our market, HDFC Bank, Asian Paints. But sometimes when markets tend to bounce off lows and maybe are at some kind of an inflection point, investors or some fund managers tend to go down the risk ladder, maybe look at cyclical plays, things which have bombed out valuations. Are you inclined to look at that kind of investment themes at all?
We're open to look at all the names in the Indian market, but it goes back to what do we want when we buy a position in our portfolio. The names, the type of names you've mentioned, you're quite correct. The short-term bounce could be in those type of names like you've mentioned. But again, if you look at a longer-term track record of the names that we hold in the portfolio and that I've mentioned, over the longer term, we expect those names to continue to perform. But I'm perfectly aware that you will see opportunities in some of the more cyclical names within the Indian market, some of the steel names, for example. But we're comfortable with the names that we have, and we will look at everything. If we feel that there are some long-term opportunities within the more cyclical sectors, then we would invest in those names.
What about industrials in India? Where are we in the cycle? Because we haven't seen any marked signs of recovery in the capex cycle, private capex particularly. But are you hopeful that's going to happen soon, or is it going to be a long wait out there?
I mean, we are hopeful and we are waiting, but there are challenges, and I think that's one of the problems that private sector industrial companies face. In India, we know obviously the government is trying to support that. It's trying to create the environment for private sector capex to come through. But until that does so, I guess the focus will be on the government capex within within India. I don't know when that private sector capex comes through. That's a function, I guess, of growth, utilisation rates and leverage within the corporate private corporate sector within India. But we feel that certainly it should come through, but the timing of it is unclear.